Hi, I'm Luke Kawa from the Report on Business, and I'm here with my colleague Ian McGugan. Ian, the US dollar is near its highest level since 2003, and investors seem to love the greenback. Why are you seeing red?
Well, I think it's like Kentucky in the NCAA tournament, frankly. Everybody expects Kentucky to win. Everybody expects the U.S. dollar to keep going higher. Surveys show 70 to 90% of currency investors expect a stronger U.S. dollar. My argument is that at this point, all the optimism is baked into the market. It's going to take very little to bring the U.S. dollar down.
Well, I'll agree, it's a crowded trade, no doubt. But the Japanese yen, shorting that has been a crowded trade for a while, and I don't see anybody whining about that.
True, but you have to look at valuation. You know, whether you look at The Economist magazine's Big Mac Index, or whether you look at more formal purchasing power parity calculations, the U.S. dollar is pricey to the point of absurdity.
U.S. dollar's pricey, but the U.S. economy is also, we used to call it, the cleanest dirty shirt. Now it's a spiffy tuxian. It's getting there. It is the best of the developed economies.
You're such a Yankee Doodle dandy. I mean, I swear, the U.S. economy, we've seen lots of negative surprises. Growth is probably going along at maybe a 2.5% annual rate. This is not reasons for unbounded optimism.
Well, I'll agree. Again, that U.S. economic data has been disappointing for the most part at the start of this year, but that's such a common thing at the start of the year. Analysts, economists, they start off so optimistic about what's going to happen, and then they just get browbeaten after bad data after bad data. And then the story starts to swing the other way. I'm looking forward to that in the second half of this year.
Well, and perhaps you'll be right, but at the moment you're simply ignoring the data that doesn't agree with your theory. The U.S. data has been pretty poor. The European data has actually been surprisingly positive. I'm not suggesting the U.S. economy is going to fall off a cliff, but I can see this very crowded U.S. dollar trade being reversed by not so great data over the next few months.
Well, I'd be using any downturn in that to add to my U.S. holdings and boost that. I've heard it said that the U.S. dollar tends to fall within 100 days after the Fed's first rate hike in a tightening cycle. However, what that ignores is that all of those hikes have come at a time when the U.S. dollar is in the midst of a medium-term downtrend. To use the scariest words in investing, I think it's different this time.
Well, perhaps it will be, and perhaps Kentucky will win the NCAA tournament, but I'm going to take the opposite side of that.
I'll also take the opposite. I'm taking Wisconsin. But on the greenback, we'll have to wait and see.